Good evening, guys. So, in today's video, I want to break down the concept of CRT and SMC. Right? So, basically, CRT is a strategy. Like people trade it as a full strategy. But myself, I use it basically for direction, and I combine it with SMC to get very good win rates and um, confirmation entries as well. So in today's video, I'll walk you through all you need to know about CRT and SMC, right? So first of all, let me explain the concept of CRT. So let's assume this is a candle, and then we'll have another candle here, right? Now the concept of CRT, let me add a candle. This is the wick of the candle, right? Now the concept of CRT, for CRT there are three models, but basically what I trade is the first model, right? So the concept of CRT is if you have two candles like this, if you have two candles like this, let me fill this. Okay, okay, all right. So if you have two candles like this, the concept of CRT is if this second candle takes the low, sweeps the low of this previous candle, if it sweeps it, and this sweeping, liquidity sweeping, happens on a key level. If this happens on a key level, then price will come to take out this high. Price will come to take out this high. So basically, I use this most of the time on the daily time frame, daily and weekly time frame, to get my daily bias and weekly bias, right? So for CRT, this is just basically what the concept entails, right? So if you have this is a bearish candle, if you have a bearish, the first bearish candle, the second bearish candle, if the second bearish candle sweeps the low of the first bearish candle and closes above it, right? So this is the, for a bearish candle, this is the open and this is the close, right? So if this candle closes above this sweep, then this will be the next target, right? The same thing for a bullish scenario. Let's look out for a bullish scenario. Um, let's look out for a bullish scenario. Okay, so um if this high is swept, if price sweeps this high, right, and close below it, the next target will be this low. The next target will be this low. So this for a bullish scenario. Let me change this to suit uh, bullish. You have green. Okay. Okay. So this for a bullish scenario, right? So this for a bullish scenario. Now, how do you now use this to take trades on as an SMC trader, right? So once you've confirmed this on your daily or weekly time frame, so let's use the daily time frame. Now you want to go to a lower time frame. So from the lower time frame, basically what we have is, sorry, let me take this out. For the lower time frame, what we have is markets going, creating higher highs, higher lows, higher highs, higher lows, higher highs, right? Now, for you to take an entry with this CRT from the lower time frame after you've confirmed that yes, price is going for this other liquidity, right? So for this is more like the buy side liquidity. That is the buy side liquidity, and this is the sell side liquidity, right? That is the sell side liquidity. This here, this is the sell side liquidity, and this is the buy side liquidity. Okay, so the market moves from liquidity to liquidity, from sell side to buy side to sell side, right? So now we've taken the sell side. This for a bearish scenario, we've taken the sell side. So the next point price we'll be targeting is the buy side liquidity, right? So the same thing for a bullish scenario. Once we've taken the buy side, the next place price we'll be targeting is the sell side liquidity. Now for a lower time frame entry as a smart money trader. So basically for smart money, we trade the concept of if price moves, creates a lower low and break an external high. If price does this and break an external high, we are expecting price to come somewhere here to continue the buys, right? Let me take this off. All right. So we expect price to come somewhere around this zone to continue the buy, right? So this will not be our inducement, right? So how do you take entries after confirming this stuff here? You want to wait for a valid demand zone to fail, right? So once we've taken an external high, you want something like this to happen. You want something like this to happen, this zone to fail, price come take a flip zone and then continue the sell. So this is what you want. You have to wait for this to play out, right? So you want a demand to fail for a bullish scenario. You want the demand to fail, and then you look for an entry somewhere around there with this as your inducement for the sell, right? This is for a bullish scenario. The same thing for a bearish scenario. If for a bearish scenario, you certainly need to wait for a supply to fail. A bearish scenario. This is bullish turn bearish. Now for a bearish turn bullish, um, you want to wait for this to fail. Okay, then market will continue the buy. So this is more like a supply zone here, somewhere around there, right? Somewhere around, this is the supply zone. This is your inducement. The last one mitigated supply zone, and this has to come from the 30 minutes of 1 hour time frame or 15 minutes if you are good with marking out of valid POI. So basically the concept of this is you need to wait for a valid supply to fail for a bearish scenario, and then you take your entry from here. Take your entry from here and you continue the buy. Right. So let me just show you a case scenario from the chart. Okay, so we have there are so many of them. So we had this, if you watch closely here, let me expand this. So we had a sweep here. Look at this one, first one here. See how price swept here and continue buying up. We bought to this high. So how price reacted after taking that high. So that is the CRT high. So this is the sell side liquidity. This is the buy side liquidity. Case scenario, this is it. Sell side liquidity, buy side liquidity. Now let me show you how you could have gotten into this trade. So this is what date is this? 24th of December. So let's go to the lower time frame. Let's go to the 1 hour time frame. Then we'll go to 24th of December. Okay. So 24th of December, this was the trade. Now this was where exactly. This was where is our target? Okay, these are targets. This was where there was a supplier that failed. This zone here, right? That supply was supposed to continue the sell, and see, this was when the liquidity has been swept already. This was where we had the sweep of liquidity, right? That was where we had the sweep of liquidity. Now this supply failed. This is a valid supply that is meant to continue the sell, but it failed. And immediately it failed, look at where price came to react from. Price started buying from this zone. This is a breaker block anyway. But if you go to the lower time frame, you get a candlestick from here. You see price reacted from that zone and continued buying. If you take this trade, I usually target 1:4. That's enough. 1:4. Targeting this liquidity alone is enough. So you see, that is just for this for um bearish to bullish scenario. Let me look for a bullish to bearish scenario. Let me look for a bullish to bearish scenario. A bullish to bearish scenario. Okay. Okay, look at this. Can I? Okay. So look at this. We had this sweep here. Price swept this high. Price swept that high as a as a buy side liquidity. Where will be our next target? This low. This low will be our next target. So let's go to the lower time frame. This is 15th January 2025. Now I will not be able to open it. Okay, that is too far. Let's look around Jan December. Let's look for another example for a bullish to bearish scenario. A bullish to bearish scenario. Okay, I couldn't get into this trade because of the volatility, the price movement. So this one, price took out that high, right? Price took out that high as buy side liquidity. This is even another one here. Price took out this zone as buy side liquidity, right? Now where should be the next target? This should be the next target. That should be the next target. Okay. So let's go to the lower time frame. This is 14th January 2026. 14th January 2026. Okay. Okay. Look at what happened there. This zone has already been mitigated, right? Now this zone failed completely. This was this zone failed. You can see the reaction that happened there, right? So where will you be expecting a buy from, a sell to continue the sales from? This is where we had the demand fail. So we want to get an entry, right? But if you look at this, we cannot take these are has already been mitigated. This zone has been mitigated as well. Okay, there's a pullback here. Somewhere here has been mitigated. This candlestick has been mitigated. That was where price reacted from. Now this was where we continued the sell from this hidden base. That was where price continues the sell. Price ignored this zone completely and took the sell from here. If you go to the 15 minutes time frame, even if you didn't get this particular entry, you would have gotten this entry from this candlestick, right? Then before we started having pullbacks, this already gave a 1:4, this is already 1:6. This is already 1:6. So my TP would have been somewhere around there. Yeah, my TP would have been somewhere around there. So you see how it is. This actually works on all pairs, like works on all pairs, NAS 100. These are the three pairs I trade at the moment. So I'll be making more videos on SMC and CRT. So by the time you've thoroughly gone through my videos, you'll be a master at these things. If you found this video useful, don't forget to like, share, comment, and subscribe so whenever I drop videos, you get updated. Thank you.